friendshoring, nearshoring, whatever you want to call it, global trade flows are changing.
The model that China has given to the rest of the emerging markets is that if you focus on innovation and you get the technology right, then you can conquer the world.
I think the key misunderstanding about emerging markets is that they're very much linked to what's going on in the US. I don't think that is the case anymore. That's something that investors really need to take on board.
With Donald J. Trump back in the White House, I think it's going to be a pretty exciting time for emerging markets in 2025.
China's not really a good place to be a mass manufacturer anymore. Businesses are now reluctant to invest there because they see it as unsafe in terms of their supply chain.
The trend is for being close to the customer because it keeps costs low. That's the reason why China was able to dominate so many sectors. Now we're seeing that trend out of China, and that's an opportunity for the rest of the world.
I don't think we can ignore China. China is still a huge manufacturer with huge manufacturing capacity. By taking out China, you focus into those potential opportunities. I think the real winners are places in Southeast Asia. You've seen a big amount of investment in Vietnam. We've also seen a lot of investment into Mexico, which is one of the key winners from this nearshoring trend.
Mexico is now the top trading partner for the US. 15% of US imports, whereas Canada is 14%, China is 13%. This is exciting.
These economies are also becoming an engine of global growth in their own right. So in some sense, those manufacturers don't need to nearshore, they're already there.
India is one of the most exciting markets in emerging markets at the moment. Could well be 30% of the benchmark in coming years. And it's got the largest population of consumers now on the planet, and there's a huge amount of companies coming to market in India. In the United Arab Emirates, we're seeing huge amounts of immigration and business formation that's really driving the economy.
We've seen that countries which are reliant on just their exports might see a bit more volatility in terms of their growth rates. We like countries which have a strong domestic demand base.
The green transition is quite an interesting theme for emerging markets. If you look at the key commodities required to do the transition, one is copper. You have some of the world's most important and largest copper mines located within emerging markets, particularly Latin America, so Chile and Peru. And then also lithium is very key in terms of batteries for electric vehicles, and you have the largest lithium mines in the world based in the Atacama Desert in Chile.
These trends are accelerated because of certain new developments like the rise of AI. Southeast Asia has had an influx of data centers being operated by some of these big hyperscalers. A lot of these data centers are coming up in unexpected places like Malaysia, where the policy development has been in the right direction to encourage foreign companies coming and setting up plants there. And the cost of operating these data centers is cheap.
Emerging markets don't host some of the key names within AI like NVIDIA, Microsoft, Apple. Emerging markets does have a very important role to play within that value chain.
If I had one word to explain what emerging markets are and what unites them, it would be potential.
There are more hidden gems in emerging markets to be discovered. Emerging market companies require active management because they are less well known. It is certainly beneficial to go and do the legwork, meet with the companies who may not be as easily accessible to all investors. It allows us to find winners of tomorrow.